Hey y'all.
Hey y'all, hey everybody, y'all welcome in. We're gonna get started in a little bit. Y'all are gonna be muted until the end of the class, and then I'm gonna allow y'all to ask questions. So make sure y'all got y'all pens, papers, notepads, whatever y'all gonna use to take y'all notes. But welcome and thank y'all for showing up on time. We're gonna give everybody to like 7:05 because I only got the Zoom for an hour, so I want to make sure y'all get the whole like presentation and get time to ask y'all questions. It will be recorded. I am gonna post it in the hold on, let me see. I am gonna post it in the Discord. So it will be recorded. Everybody that just came in, I was telling them that we're gonna give everybody to like 7:05 to get in, and then we're gonna start because we only got the Zoom for an hour. Y'all will be muted until the end of the presentation, and then I'm gonna take y'all off mute to give y'all the chance to ask questions. And for like any questions that don't get asked in here, I can go live in the Discord for y'all to ask the questions because again, I only got the Zoom, the link only lasts for an hour. And can y'all hear me okay? Can y'all put like a one in the chat if y'all can hear me okay? If I sound okay? The music gonna go off once I start, but I just want to make sure y'all can hear me. Okay, thank you. Thank y'all. We got 2 more minutes. I'm gonna give everybody like 2 more minutes. Coming in. And on y'all screen, if y'all are seeing like a purple background that says options trading 101, can y'all put a 2 in the chat? I want to make sure my screen is sharing right. Thanks. Okay, y'all. Okay, it's 7:05. First off, I want to welcome y'all. I want to thank y'all for taking the time out to come and come learn some information. We're gonna go over options trading 101. We're gonna go over options like basically like from beginning to end. So like I was saying, hope y'all got y'all notebooks, y'all pens, pencils, papers, whatever y'all gonna write with, take y'all notes. At the end, I am gonna take y'all off mute and give y'all a chance to ask questions. you don't want to ask questions in here, you can DM me. And any questions that don't get to get asked in here, we can go live, or you can put them in the like questions and answer chat in the Discord. But we're gonna go ahead and get started. I'm God's favorite, also known as Bonnie. I'll be your instructor today. I've been trading for about 2.5 years. I started out in options. I still trade options. This year in April, I started learning futures. And I'm really in love with futures. I love trading and everything about the skill. I'm chasing the dream of being a profitable full-time day trader. I actually technically am a full-time day trader, but in futures, I'm not profitable yet. In options, I am. Profitable, yeah, I'm trying not to get emotional. It's not, I'm not really chasing, so I'm not chasing the money. I'm chasing the freedom that the money brings. I'm still learning. I'm gonna always be a learner. Trading is a skill. Once you learn it, no one can take it from you. Trading is a journey. It comes with losses, as does just about anything else in life. Please understand, it is not a get rich quick scheme. That's what I want people to understand. Because a lot of people come in, oh, I need money, I need money. Yes, trading can be lucrative. It can change your life. It can do so much, but most traders are not profitable until 2 to 5 years into their journey. Like, it's a learning journey, but I promise, if you stick it out, stick it out through all the losses, if you stick it out through all the losses, all the times you want to give up, like all the information you bring in when you think it's difficult, when you think it's hard, when you think you can't do it, if you just stick to it and don't give up, it is going to be worth it. I haven't even made it all the way, and I know it's going to be worth it. Um, It takes time, dedication, focus, discipline, and a lot of getting to know yourself. Trading is a personal journey, and it's going to make you get to know yourself, whether you like it or not. A lot of traumas that we have, things that we believe, things that we've grown up and been programmed to believe, like that shit is going to show in your charts. It's going to show when you don't trust yourself in a trade, when you didn't map this trade out and you got everything wrote down to the T. But when you get in and you see that first red candle and you get out and then the trade end up going your way, that's you not down yourself, and that has to do with something that's inside of you. It's not the charts, it's not the price, it's not none of it's you. And you definitely gonna figure out that you're gonna have to sit down with yourself and figure out, get some shit together, because if not, it's gonna mess with you when in your trading journey. And I can like attest to that in real life. Um, I'm excited to share what I've learned thus far on my journey with you. I hope you have your papers, your pens, pencils, your index cards, whatever you decide to write with and take notes. I thank you for joining me, and I hope you're able to learn something today. Okay, so what even is an option? Imagine you at, okay, so basically we're gonna go through like a slideshow, like, so y'all can, if y'all need me to stop, y'all can y'all can let me know in the chat so y'all can take out screenshots, take out notes or whatever. And then we're gonna go over some examples. We're gonna look at the charts and like I'm gonna like show y'all, like it's just not gonna be like words. Imagine you're at the mall, you see some Jordan 4s for $100. You don't have the cash yet, but the store lets you pay $10 to lock in their price for 1 week. That $10 is your premium. You just bought a call option. If the Jordans go up to $150, so they were $100. If they go up to $150 during the week, you still get to pay the $100. You still get to pay the $100. You win. So basically, you still get them at the same price, even though they went up. And you get profit. If the price drops to $80, you can just walk away and only lose $10. So if it went down instead of going up, because you bought a call, you would just lose that $10 of the $100 that, the $10 that you spent on the call option. You would only lose that. You can only, basically, in options, and that's another thing, that's what I like about options. Basically, you can only lose what you put in. So if you buy a contract for $100 and it don't go your way, and shit, you really don't even have to lose that whole 100 if you have your risk management set up. Like, if you have an amount that you're only willing to risk. So like if I put $100 in and I say, oh, I'm only willing to risk 5. So when they go down, whatever percent that is to that minus $5, I'm supposed to get out. A lot of new traders don't. I was that trader that didn't a lot of times, but In options, you can only lose what you put in. So these are some like key terms that you might hear people talk about when it comes to options. Call, that's when you think the price is going to go up. That's also considered buy. Call and buy are the same thing. Put and sell are the same thing. That's when you think the price is going to go down. Premium, that's the price that you can place the bet on. So that's basically what you paying for your contract. So if you buy a contract for $10, that's your premium. If it's $25, that's your premium. The strike price is your bet price. So that's the price that you're betting that is going to get to or get close to. Now, most of the time you want it to get to that price and go beyond that price to get more profit. Expiration, every contract in options comes with an expiration. That's the deadline for your bet to work. So by that deadline, if price ain't got to your strike price, your bet price, then either you losing what you put in, or if you had your risk set and what you was willing to risk, then you would only lose that if it didn't go your way by the time the expiration came. So stock options. A stock option is a financial instrument that gives its owners the right, but not the obligation to purchase a given asset in an agreed upon price and date. So basically, like you buying a piece of a stock, but you don't technically own it because you're going to give it back when you sell it back to them. So they're giving you rights to it, but you don't own it, and you don't have like the obligation to purchase it. You don't have to purchase it because you just basically borrowing it. Options contract. It's an agreement between two parties to facilitate a potential transaction involving the asset at the present price and date. The contract is what you purchase, which is connected to the stock option itself. So the contract is basically what you're purchasing. It's not a physical piece of paper or anything. It's just what they call it inside of the broker or whatever it is that you choose to use. The option, a financial instrument that is based on the value of an underlying security, such as a stock. So options, they call it options because like I was saying earlier, you can buy a call or a put, like whether you want it to go up or go down. So you have options. A call option, a financial derivative that gives its owner the right to buy a specified security at a set price within a certain time frame. So a call, that's basically when you think price gonna go up. We talked about that a minute ago. The put, price go down. A contract giving the option buyer the right but not the obligation to sell or sell short a specified amount of an underlying security at a predetermined price within a specific time frame. And then option premium, we was talking about that. That was one of the key terms. The current market price of the option contract and thus the income received by the seller writer of an option contract to another party. How to trade options. So first thing you will want to do is pick a stock. In this example, we use an Apple because everybody know about Apple. I'm pretty sure most people got an Apple iPhone, Apple iPad, watch, AirPods. Everybody know about Apple, but there's other stocks like Tesla, SPY, all of those. And then okay, so first you would pick a stock, and then you have to choose a broker. Y'all know Robinhood is my A1 day one. I like Webull as well because Webull has paper trading, but of course there's other like TD Ameritrade, Thinkorswim, Charles Schwab, Fidelity. Like there's so many. So you just have to explore the platforms and figure out just which one works best for you because everybody not the same. Everybody's journey not going to be the same. This is personal. So then again, we just gonna go through these slides and then we're gonna actually go. I'm gonna take y'all, we're gonna look at Webull, we're gonna look at a chart, we're gonna do some stuff. If at any time y'all need me to go back or slow down, just let me know. We will pull up the option chain and we're gonna go through like what an option chain is, what it look like, what are some of the meanings of the stuff on the option chain. Looks like a bunch of rows, call side, put side, you have to pick an expiration date when it expires, choose a strike price, what price you're betting on. Those were the terms that we just talked about. So buy a call if you think price will go up. You're basically saying bet this stock gonna rise like rent. This is when a stock is going up, that's usually like it's going in an uptrend, like so it's going up, which creates higher highs and higher lows. Buy a put if you think it'll go down. You're betting the stock about to flop like a SoundCloud rapper. So usually when the stock is going down, that's a downtrend. And when it's in a downtrend, it usually creates lower highs and lower lows. Lower highs and lower lows. And this is basically like market structure. Like when they speak about market structure like that, we're not going over there today, but like that's basically what that is. Like it's just making structure. Will they have a lot of little lines between, or will they just go like this? Like there's still some kind of structure. Okay, example. We bought a Nike call option at a strike price was $100. The premium was $5, so that's $5 is what we paid. The expiration date is for Friday. If Nike goes up to 110, the option will be worth at least $10 minus your $5 cost. Meaning, so you would get $10 profit, like minus your $5, but in all it'll be $15. If Nike stays under $100, you will lose your $5. That's it. So basically, if it stays under, well, technically you don't gotta lose your whole $5. Because like I said, if you have your risk and what you're willing to risk, then you could be willing to lose too, and still take your 3 home. So it's basically what you want to risk. But in all, you can't lose more than you put in. Don't trade with the rent money. Do not trade with your rent money. Whew. Baby, don't trade with your rent money, light bill money. Don't do it. Don't do it. Don't do it. And I'm just telling you from experience. Don't do it. Paper trade first. Fake money practice. Y'all know I preach about paper trading. Paper trading. I'll talk about paper trading till I die. And when I make $1 million, I'm still gonna be paper trading. I don't give a damn. Don't care what nobody's saying. I'm still going to be paper trading. I wouldn't care. I wouldn't care. Use 1 to 2% of your account on one trade. So like if you only got $50 in your account, okay, so I'm saying this to y'all because this is what y'all supposed to practice. This is good risk management. If you only got like $50 in your account, then technically, you only supposed to be spending a couple dollars on a contract. And if these contracts out there that cost a couple dollars, you just gotta know, you gotta be on the right side of the movement. You just gotta know what you're doing. Because I didn't turn the dollar into $100 before, so it's possible. I didn't see it with my own eyes. I didn't did it myself. I promise. So don't. So me, I say like 10%. Well, honestly, I ain't gonna say that because me shit like let me stop listening because I'm funny. Okay, so last week I only had $17 in my brother's account and I wasn't willing I had some more money. I could have put some more money in there, but I said, no, I'm not. I'm about to see what I can turn this into. So I spent that $17 on the contract, and that $17 ended up going to, I think it was like 42 or 43. And then boom, the next day I had $43 to trade with. And then boom, I went back in and bought like a 20-some dollar contract and then turned that little something into like it's possible, but you can't want big wins fast if you only playing with a little bit. You gotta be rational. Like you gotta think about it. You gotta make sense, okay? Gotta make sense. But it's possible. The market don't owe you nothing. It does not owe you anything, and it will take everything. You hear me? Even the stuff you don't got, it'll take it if you let it. Be humble. Most traders lose money from being greedy or bored. Baby, so many. I didn't lost money from both being greedy and being bored. Being bored, just being on the charts and just doing stuff I don't need to do because I ain't got nothing else to do. Don't do it. Please don't do it. I'm sorry, yeah. So yeah, don't, and being greedy, like if so so the responsible thing to do is to have a goal when you go into the market. But honestly, it's hard because like anything is possible in the market, baby. If y'all was in the group chat last week, like I had a couple plays that went over 1,000%. Like so, it's kind of hard when you see stuff like that. But in the beginning, stick to your rules. Have some rules because that stuff gonna come. Like the market gonna always be here. You gonna always have a day that you can hit at that. Like don't be greedy too soon, okay? Because that is just gonna ruin it and make the journey harder than it is. Because you're gonna think like, dang, what's wrong with me? I can't hit that much. Like, no, don't do that. A good little 10, 20, 30% at the beginning is great. If you get 20% every day for 5 days, that's 100%. Who don't want 100%? That stuff add up. Don't let nobody tell you it don't. A win is a fucking win. All wins matter. I don't give a damn if it was $2. You $2 more in that money than you was yesterday. You hear me? It all add up. It all adds up. Don't let nobody tell you it don't. Oh, what they say. Oh, what are the Greeks in options trading? Okay, so yeah, the options, that's the one thing that I don't too much love about options, because they have like other aspects that you really just have to look at, and that are important to your money making and your money losing. We're gonna go over the Greeks. Think of Greeks as gauges on your trading dashboard. They help you understand how your options might move with time, price, and volatility. Don't let the match scare you. We're gonna break it down. The first one is delta. Delta is like the gas pedal. It tells you how much your options will move if the stock moves $1. Example, a delta of 0.50 means for every dollar the stock goes up, your option gains 50 cents. And in the stock market, it goes in like cents, but you move the decimal over too. You always move the decimal over to the right too. So technically that would be $50. So every dollar that stock go up, you would make $50. And they go with any, like if you were, we're gonna look at the contracts, and I'm gonna show you like how the difference in how you move your little decimal. Okay, call options call options have a positive delta. So you on a call option, it'll say 0 to 1. It'll be positive. But put options have a negative delta. So theirs say 0 to -1. The closer to the 1 or the -1, the more aggressive it moves. Think of it like delta equals how hard you're pressing the gas pedal on the car. So basically, like the higher the delta, because y'all know 0 is less than 1. So the higher the delta, the more like the price gonna move. Like the harder it's gonna move, and shit, the harder profit you will get in profit, or how fast you can get in profit. Number 2, gamma. Gamma is like the turbo boost. It measures how fast delta is changing. High gamma equals delta changes quick, equals more movement, more risk. So it's moving faster, it's moving more, and you might have to risk more. Think of it like gamma equals the turbo on nitro. You hit it in Mario Kart. Short burst, but can send you flying. And then I have like a little drawing. So basically that when you be seeing, okay, so I don't know if some of y'all have looked at like options and seen like the options chain, or have been in the options trade and it go into drawdown. Drawdown is basically like when it goes into negative, it's in the red, it's not going into profit. So the delta, it can make your stuff go from 100% in the green all the way to negative 75%. Like it can make it move fast. So that's what gamma is. And then we have theta. Theta equals time decoded. Ooh, that's the worst one of them all. Theta, aka the clock. Options lose value every day as expirations get closer. This is theta. A theta of negative 0.05 equals your options loses $5 every day per contract. Think of it like theta equals melting ice cream. If you wait too long, your cone turns into soup. So basically, like they have like 0 DTEs. There'll be contracts that expire the same day. So we was talking about delta. We was talking about delta. So usually if you have like a contract that expire on the same day, your theta 9 times out of 10 is gonna be higher than your delta. But in a regular contract that like expire a week out, your theta should not be higher than your delta, because theta is the money that you're going to be giving to them, and delta is the money you're going to be taking for yourself. So of course you don't want to give them more than you're trying to take, because what sense do that make? We're trying to make money, we ain't trying to give money. So theta is an important one to look out for when you're getting into a contract. And again, we're gonna look at the contracts and we're gonna go over that. Vega is another one that has to do with volatility swings. It tells you how much your options price will change if volatility changes. High Vega, your options price is sensitive to wild price swings, like during earnings. I do not like to play earnings, because earnings, I don't know, earnings, they'll get you, because if earnings like after the market, it can shoot up 1,000%, and then by the time market, like overnight, by the time market open in the morning, it didn't shot the other way 1,000%. So people that was in, like if you was in puts and you was betting it shot down, it probably shot down first, but by the time market opened, shit, it had shot back up, and you lost. You didn't lost money. You didn't make money. I didn't lost some good money on playing earnings. I don't recommend it, but I mean, once you learn it, you might like playing earnings because it, like I said, it can make you money. And if you straddle, like some people do calls and puts like on earnings, and they can make you some money if you got the money to play big like that, you know. So it's different ways, so many different ways to trade. Vega, how well, stop it. Oh, like during earnings, think of it like Vega equals how well the roller coaster is. Calm equals low Vega. Crazy ride equals high Vega. Quick recap. Delta equals gas pedal, how hard the price moves. Gamma equals turbo, how fast delta changes. Theta is time decay, loses value daily. So basically, okay, so delta is the money you would make. Theta is the money you would basically lose. Delta, I'm not gonna lie, when I go look at options, the main two that I focus on is delta and theta, and implied volatility, which is not a Greek, but it's on the contracts that I'm gonna show y'all here. But I only focus. I in my mind, I focus on delta and theta because though in my mind them are the most important to me. Like as long as my theta ain't too much higher than my delta, I'll be good. Like I know I can make some money. When do I care about Greeks? Short-term trades, watch Theta. It'll eat you alive. Near expiration, watch Gamma. It moves wild. Earnings coming up, look at Vega. You will see crazy price swings. I'm not gonna lie, if a company got earnings coming day, baby, they will change the prices of them contracts. Contracts that used to cost $3 now $3,000. Like literally, they be doing stuff like they be manipulating stuff like that. Directional bias, delta helps you pick how strong your move is. Okay. Don't let Greeks bully you. Don't be scared of the Greeks. So once you learn like which one is which, and like I said, the main two I focus on is them two because that's basically how much I'm gonna be losing and how much I'm gonna be making. You don't have to memorize formulas, just understand the vibes. Use them like tools in your trading toolbox. Don't overthink it. Okay, so y'all, so I think that's kind of almost the end of the presentation. So this is I was telling somebody the other day, like when you open your whether you open Webull or Robinhood, it comes with two different accounts. The individual margin account, which it limits how many trades you can take a day, and you have to have so much a certain amount of money in there in order to trade. And then they have a cash account. A cash account is what you need if you want to day trade, and like if you want to take multiple trades a day and you want to put like a little bit at a time, or like if you only have a little bit to start with, like a cash account is what you need. A cash account, not an individual margin, because margin means you have to have a certain amount of money. You have to have a certain margin in order to trade, and then they limit how many trades you can take a day. Oh, that's it. That's the last page. Okay, so hold on, y'all. So that's the last page of the options thing. So now we're gonna look at we're gonna go over the Robinhood and we're gonna look at a chart. Okay. Okay, so this is Robinhood. This is Robinhood, and we're on the Robinhood stock. I love Robinhood. I made money off of Robinhood today. I hit 100%. It went up 200%, but I got out at like 150% because I didn't want to be greedy, but I had added it to my watch list so I could see how much it would go up, and it did go up to 200%. So I think I had turned $20 into 20. It was like 20. I gotta find a screenshot, but we made money today. Oh, matter of fact, we ain't even got to find a screenshot. We on here, so we can look at it. So I got in at 8:31 this morning. I bought a contract at $20 and I got out at 9:22. So it was like almost an hour and it went up 150% so I turned $20 into $50 this morning. So that was my actual order right there. Like I got in at 8:31 and I got out at 9:22. So let me go back. So Robinhood is one of like my favorite stocks, like because Robinhood moves and it is a good stock for like a long. Well, oh, this is not financial advice. Let me say that. Hold on, wait a minute. But as far as long-term investments, like Robinhood is going somewhere. It is going to, y'all see how down it is. So whatever goes up must come down, and whatever comes down must go up. So it's gonna get back to this price. What's this? This was $100. Right now it is at $96. So it got somewhere to go, and I don't even think that's the all-time high. It might be. Oh, it might be, but it got somewhere to go. So I'm definitely gonna be looking at that. I don't know if I'm gonna trade tomorrow because I think it's like a short trading day and they be manipulating the market. But next week I will be looking at Robinhood. Like that's my favorite. Okay, so you would search your stock up here. All right, we already got Robinhood put up because that's who we're gonna look at on the charts too. So once you approve for options level 2 and you want to trade an option, so just say even if you not if if you haven't learned how to read the charts yet, and maybe I'll put a play in the chat, and I'm like, okay, y'all, because I'll usually screenshot like what price I'm getting in at, my expiration, like I give y'all all of it. So if I was to put something in the chat, I'd be like, okay, y'all, I'm looking at Robinhood. Um, First off, you'll pull up, you'll search hood in the hood. That's Robinhood. And then you're gonna look for once you approve for options, you'll have the trade options button. So you would press trade hood options. And y'all, I honestly do not trade Robinhood on a desktop or a laptop. I love Robinhood on my phone, like just because it just seems so much more easier. But it basically looked the same, but it just seemed easy on the phone. So up here, this is the options chain. When people say options chain, this is what they talk about because it's the chain of all the option contracts and prices. So across the top dashboard, you have your buys, your sales. Y'all, you always gonna be on buy. Don't click on sell because you sell basically mean you already got the stuff and you selling it. Even when you go to sell it, you don't click on sell here. You would sell it through the contract you already bought. So just make sure it's on buy. And then a call. Oh, y'all can't see the screen? If you can see the screen, if you can see the Robinhood screen, put a 1 in the chat. Because somebody said they can't. If you can't see it, put a 2 in the chat. Okay. Hold on, y'all. Oh, my bad. Okay, is it showing Robinhood now? Okay. So let me go back. Okay, so what I was saying is like, okay, Hood, you will go and you will search your ticker up here in the search box once you get in Robinhood. When you have a level 2 options approval, you'll have the trade hood, the trade on any stock is gonna say trade that stock option. That's what you would click on. So once it opened up, this is the options chain. When anybody talk about the options chain, this is what it is. Like this is the options chain because it has all the contracts, and contracts are what we're buying. So you make sure you keep it on buy because like I was saying, sell is basically like you already got it and you're selling it. But even when you get to sell, go to sell it back, you don't have to click on sell here. You would click on the actual contract and just execute it for them to sell it. So buy, and then right here you have calls and puts. Remember, calls is if you think the price is going to go up, and puts is if you think the price is going to go down. So if we were to be looking for a call, anytime you see this little where it says share price, that's like the current price. So if you're looking for a call, we're not going to go under. You could, but these are going to be more expensive because technically price has already been there. So price is at $96 and this is $96. So price already hit that. If you did have the money to go there, you would be in profit faster. So this is technically called in the money, meaning it's already making money. So if you spent more, you would make more because you would be getting in already in the money. But if you want to go cheaper, then you would on when it's calls, you would scroll up and get things that's like above what the current price is. So just say that I would like y'all know I'll be looking for the cheap contract. So it said 96. So today I was trading Hood and Hood was like Hood was I had got in at 831. Hold on, let me find I'm gonna make this back white real quick. Okay. So let me find 8:31. What's today? Wednesday, yeah, 20. Okay, about right there. 2. Okay, so this morning I had got in at 8:31. It's on the 8:30 candle, but like this candle. Um, I had got on this candle. So in my mind, so when I had did like my analysis, when I was like, Hood is going to $98. Like I see higher than 98, but I know for sure it's going for $98. Like that's what I had in my mind, like when I got in my call. Because mind y'all, market opened at 8:30. I got in at 8:31. Literally, like I felt like I knew. And like before market open, you can go look at the chart. If you pay for trading view, then you can pay for real-time data, like where it actually show you the current price, like pre-market. So like pre-market, it was already showing signs of where my little line go? Oh, this purple line. So it was already showing signs of going up. So look, it had consolidated. It was consolidating. And then here it broke above the consolidation. So I was like, oh yeah. And that was at 8, like that was like right on the dot of opening. Like all I needed to know was like which way it was gonna break. And it broke up. I seen this doji candle before market open. I said, oh, I'm gonna wait to see which way it break. And it broke up, which it went with my like what I was already thinking. So I'm like, yeah, I'm gonna jump in. I jumped in and I was like, my job said it was gonna go to $98. So I was like, my target is gonna be $98. I got in here 8:31 on this candle and I wrote it all the way up. And I got out at 9, I think it said 9:21 or 9:22. I think it said like 9:22. So I got out about right here. And the reason why I got out is because honestly, I just didn't want to be greedy. That was the only reason. Cause I seen, like I said, I seen higher. I seen at least $100, and I think it hit like 101 or something. So no, it only hit. Oh, it hit 189, $100 and 80 some cent. I seen 100, but I was just like, I'm not gonna be greedy, and I had only bought one contract, which I need to stop doing it because I could have left a runner. But I was like, I'm not gonna be greedy. I'm just gonna take my profit and I'm just gonna watch the rest of the way. But it hit TP, it went up and hit the 100, and then it came back down. I could have caught the ride back down because I was like, I know it's gonna go back down to 197, 198 because there was like a major resistance level. So now it's gonna be a major support level. So it gotta come back down and test it. But I didn't get back in because again, I wasn't being greedy. Um, but I was saying that to say, okay, so I saw Hood. So tomorrow I could, in my mind, since Hood pulled back and I know that it's like on an uptrend, I would be looking for it to go up unless it gave me some signs by pre-market that it wanted to reverse. Um, so I will be looking at like it said 96, so I will be looking at like honestly, I'll be looking for a cheap one. But again, tomorrow is like the last day of the trading week, so contracts might be a little more expensive. They might have some like ugly Greeks, but we have to open one up. So I would honestly, this options could change by in the morning depending on pre-market. Just looking at it right now, I probably would go for the $44 just because they ain't got that many options up here beyond um the 105. And I really don't. I wouldn't pick 105. I would go a little closer to in the money, but right now these prices ain't looking good. I don't like them when they like that. We're gonna do this. We're gonna do 103. So it will be okay. So 103 will be the strike price. 103.78 would be break even. Break even means basically like if you were to get in a trade and it went your way and maybe it came back down, like to get out in profit and not losing anything, that would be basically break even. Like you not losing anything, you coming out not losing. Um, so the strike price, the premium for this one is $81 again. Y'all, I was telling y'all that it got the decimal point, so that they be saying cent, but they really mean dollars. So you would move this over to, so there would be $81. So you would be paying $81 for this contract. So how I would look to see if it's a good contract, Okay, so if I was to call out something, I'd be like, okay, y'all, I'm looking at hood 103 strike price. So you will come in, look for the strike price. Okay, she looking at 103. This 103 right here. I'm looking at 103 strike price. Now, mind you, I can say I say that at like 7:15. You don't come in until 7:18. You come in, you still see the 103 strike price, but now hood is moving and your ass price or your premium is now like 90 some dollars. Well, we in profit, but you getting in late, so your profit not gonna look like our profit. You could probably still catch the move, but you're going to be paying a little more, and your profit, you might not get as much profit at the end because we got in earlier than you. And that's what a lot of people don't be understanding. Like if you're not getting in at the same, everybody is not gonna get at the end at the same time. Even if you catch it at the time I call it, by the time you go to the option change, it could have been didn't move the two to $3. It could have then went down, and you get it for $78 and I pay 81, or it could have been pulled back and then you get it for $60 and I pay 81. You're going to have more profit when they go back up than I am. So it just like it depends on a lot of stuff when it comes to like trading options. Okay, so I would be looking at the Greek. So we said we was gonna look at delta is the most important and theta. Y'all, this theta is out the fuck rages. Theta, theta for this contract is $137. Delta is only $22. So I wouldn't even trade this because unless I'm just I guy came down and told me my yeah, it's gonna go up. Like I would not buy this contract because Theta is $137. And I mean, I guess that makes sense because it expires tomorrow. Like it expires tomorrow. It's like the last day. So Theta is going to be high. But like that's ridiculous. Like that would not be a good contract to buy. Like, no. But in this case, yeah. So we look at the delta. Delta $22. Theta is $137 because remember we moving the decimal over two. No matter where it's at, you're moving it over to the right too. So it's $137.29. So that's how much we would be losing if price does not go our way. And honestly, in options, like if your contract, if it's on your expiration date, if your contract, say your contract ain't moved and you still got like, so say you pay $50 for your contract and it's only down $10, so you still got $40 by 12 o'clock, I say 11. By 11 o'clock, 12 o'clock on the day your contract is filed, if you holding it all the way to the end, sell it because by the end of the day, they're going to take every little piece you got left. Theta is going to eat that up. So you might not even get $1 back. If you ain't made profit by 12 o'clock, 11 o'clock that morning, that day, just cut your losses, take what you got left, and go on about your business. And if it's already all the way down and it's already at $1, then just don't expect nothing back because you're not going to get anything back. Theta ate it up. Theta ate it up. Let me see what else I wanted to go. But that's like the option change. So that's like if I was to say this, you come in here look for strike price. I say I'm looking for hood 103. You come in here look for your strike price 103. If I said 103 and you came in and you like, dang, I don't got $81. You can always, because that's how I became a cheap trader. Like you can always go look at something else. If you know your Greeks and know what to look for, you can go look for something cheaper. You might want to buy this $58 one. You might only got $58. The delta on that is 16 and Theta is 123. Theta is lower than the other one. It's a little now the strike price is $2 higher. So you just gotta make sure it's gonna get there because if not, Theta gonna eat you up. So I mean, it's your discretion. Like you don't ever have to take exactly like what somebody called out. Like it's what's best for you and your account. It goes back to like risk management. Okay. Um. Now I'm about to take y'all off mute for the last 15 minutes, and y'all can ask questions if y'all want to. If it's something y'all want to look at or go over. Again, this class isn't about charting. It was just about the options basics. So again, if y'all have questions, I'm about to let y'all be able to come off mute. Hold on. If I can figure out how to do it. How do I do that earlier? I think I clicked on this. Okay, I think y'all can. So if y'all wanna if anybody got any questions, anything they would like to see or go over. Yeah, are y'all able to unmute?
Yes, I got it.
Okay. Do y'all got any questions?
Yeah, yeah. How you doing today?
I'm fine. How are you?
I'm good. Hey, what I heard you earlier mention that you paper trade with Webull. Is that right?
Well, I trade with Robinhood, but yes, I do have a Webull account. I used to trade with Webull, and Webull has a paper trade option, like where you can paper trade options on there.
Robinhood doesn't have that.
No, they only have it where you can add it to your watch list. They don't have an actual paper trade, like where you can go into the options chain and actually place an options trade in with paper money. They don't have it, but Webull does. Oh, and this I did say I was gonna pull up Webull and we can do. Hold on, y'all. We can go. But I am listening
Yeah,
if y'all have a question.
yeah. I don't know. I just want to say, yeah, this is all new to me, but I've been doing a lot of research and just trying to learn this stuff. That's all.
Yes, I definitely understand. Of course, this was just like an informational, like, just to give y'all an idea, like what is options and like give y'all a place to start. But of course, I didn't expect this to be like the end all be all. Like, you, of course, you're gonna have to do more studying. Of course, you're gonna have to put more time in. Like, it's not gonna all come in one day. It's not gonna all come in one lesson. It's not gonna all come in one class. But if you do put the work and the time in to learn the skill, like, it's worth it, and it's worth it.
Right.
Um,
Yeah, everything sound good though. I mean, you did a great job at that. So
well, thank you. I'm trying to figure out how to pull up my paper trading, y'all, because I haven't paper traded on Webull in a little bit. Oh, I
and
put show
that's
y'all.
what I've been learning. You gotta do some paper trade. You gotta stay
Hmm.
at demo. So
Yes, I feel like honestly, it until you so I feel like you have a little set goal, like this is how much I want to make whether it be 500, whether it be 1,000. And if once you make that on your demo account and you're comfortable, then you can start like real trading. Because if you rush yourself into the real market, you ain't doing nothing but rushing to lose. Like you not, because that's what's gonna happen. Because you're gonna get nervous. You're gonna have them jitters. Because honestly, paper trading you are not gonna have the same emotions taking a paper trade as you do in your real account. I still don't have the same emotions to this day. I can like today, y'all, in my on my futures account, I made $2,000 in my paper trading account, and I'm only made 500 in my real account. And I took the same trades, but it was just like I got out of in my real account sooner. I had my take profit lower. I like it just be. But yes, I definitely recommend paper trading. Can y'all see my Webull screen?
yep,
Okay, so on Webull, no. So once you get on Webull and you have your account pulled up again, you need a cash account. You would go up here to trading and investing, and they have paper trade. Just I don't want to download. Open some. Did they close my paper trading account now? Yeah. Um, yeah, I don't really know how to get to the paper trade. I thought I just click the button like and I have never did it on the desktop like I always do it on my phone when it comes to options. Let's see. Okay, so once I open up when I clicked on my individual cash account, then over here on the left side, if I click on these little dots down here, the paper trading come up, and then this is my paper trading account. Um, I used to trade JPM. I used to love JPM, which is Morgan Bank. I used to love them. Like I used to. Um, but so here it is, and let me see how you pull up the option chain. Like I said, I don't know how to do it on the computer, but we got to figure it out. So Mm-hmm. Oh, and if you use Weeble like these up here is like the end where you can add indicators, where you can draw on your charts, where you can edit like your candle colors and stuff. Like when you do like trading view and stuff, you want to personalize your chart to like what you like because you're the one that's gonna have to be looking at it. Like you're the one that's gonna have to study it. So like make sure you make it like pretty, make it will they be your favorite colors or colors? And I do not recommend red and green candles. I don't. I feel like it messes with your psychology when it comes to trading because as soon as you see a red candle, red equals danger. And when you look at red, you're going to think, oh, you're going to get scared. Like it's going to scare you when in our reality, price has to move. It has to turn from red to green, green to red, red. Like it has to move in order to get where it need to go. So a lot of times, like people psych themselves out, including me. Like when I was using like red and green candles. So I do suggest that you don't use red and green candles. Well, green is okay, but red specifically. Yeah, honestly, I do not know. I don't know how to do this paper train on this computer. Like if it was on my phone, maybe I'll do a screenshot, like a screen recording to show y'all how to paper trade because I don't know how to do it on the computer. Like it seems like they're making it so difficult. I don't like it. I don't like it. And they be having like Webull and Robinhood, they give like if another thing, a lot of people when they I know it's a lot of information like when y'all start, it's so much information out there, but like the platforms that y'all choose to use, go utilize their help section. Like go explore the platform. Get to know the platform because don't nobody know the platform better than the platform. Like they created it. Like, so can't nobody help you. Like, you can ask all the people in the world, but can't nobody help you better than the platform. And most of the time, they got people that you can chat with that's trained to help you get where you need to go, find what you need to find. Like, utilize the platforms, whether it's Webull, whether it's Robinhood, whether it's TradingView, whether it's TraderBait, whether it's TopStep. Like, all of these platforms have a help section, whether it be articles, whether it be questions that all people already asked, or whether it be a chat you going to ask. A lot of them have videos now. A lot of them have YouTubes now where they got videos on shit that people, oh, not supposed to be cussing, on stuff that people like ask all the time, like frequently asked questions. Like they have information, and they information is 9 times out of 10 the best information because half of these people just be assuming. But yeah, y'all. So unfortunately, I can't figure out how to pull up the options chain. Like, why is it being so difficult? Oh, they got a futures paper trade. Oh wow. Hold on.
Well, I'm sure we could find something on YouTube.
Yes, definitely. When we get off of here, I'll do a record. I got $500 on my futures. They got a futures paper trade in here. I don't know how it works, but I'm gonna go figure that out because I did not know that. When I get off, I can do a screen recording from my phone because I know how to get to it quick on my phone. It's just like I don't know how to work the desktop. Do anybody else have any questions? Because I meet this meeting link in 7 minutes, but we can still talk in the chat. I'm using the futures paper trade right. Yes, I did not know they had because I haven't been on Webull in so long. After I had took my last little win off of here, baby, I did not get back on. Yeah, no. But I did not know that. Like, yes, I'm gonna have to come explore this. I might start back using. Well, I wouldn't trade futures on here because you have to have like or you have to have I don't know if it's 5,000 or I guess depending on what you trade, you got to have a certain amount in your account in order to.
So
Um,
what I've learned, I guess, over the last couple months, I mean, because I initially when I started looking at this, I was looking at Forex. And I mean, what I'm seeing now is just basically looking at the same thing. But with now is Webull, is that a regulated broker or is that a broker?
yes, I think Webull is considered a broker. It's definitely regulated because they follow all the laws. They legit.
Oh, okay, okay.
Mm-hmm. Oh, and another thing I was gonna show y'all, like on trading. Well, not show y'all, but I was gonna like I know people be wanting like newbies like we want stocks to look at. A lot of good some stocks for like newbies. I would say JPM. SoFi moves slow, but it's something that like you would have to buy your contract like 2 3 like once you see your move, you might have to buy your contract like 2 to 3 weeks out. But like SoFi moves like SoFi moves. Like I used to love SoFi. If you know, people trade SPY, which is a S&P 500, some of the top 500 companies. But if you're scared of SPY, because SPY like is volatile, like because it's the part like it has a lot of the top companies in it. SQQQ is something that I traded when I first started because I was scared of SPY. SQQQ moves the opposite of SPY. So if SPY is going up, SQQ is going down. If SPY is going down, SQQ is going up. So like if you looking for something, you know, that you want to get in the mix of the volatile stocks, SQQ is one of them, but it just moves the opposite of SPY, but it's in the SPY family. So that chart looked a little ugly because it was like my 1 minute chart, but let me go to like a high time frame. It didn't really don't really look that ugly. And then another one is Uber, Oracle is a good one, Walmart, CVS. I like CVS. I didn't make some money, and they contracts don't be that expensive either. I didn't make some good money on them. IWM is the Russell 200, so it's like some of the top 200 companies. It's good to look at that. It's good too. I hope y'all see the screen while I'm just clicking. But yeah. Did y'all have any other questions, or did anybody want to go over or look at anything else? I hope y'all learned something. I hope I gave y'all some kind of information before the week is but by Sunday I'm gonna drop I'm gonna do a recording of like the charting because I did like a charting and candlestick little course like I did today, but it's for charting and candlesticks. So I'm gonna drop that for y'all in it. And after this, I'm gonna open the homework chat. So I'm gonna drop. It's gonna be a quiz that y'all can take over like the options, and I think it's a worksheet as well that y'all can take. And it's gonna be, and we also gonna have like a homework basket section. So if y'all want to turn it in, y'all want me to look over it, or y'all want to go over anything, y'all can put it in there when y'all done. And also the candlestick and charting thing. I think I'm gonna make like some flashcards for y'all too. Y'all have to like print them out, but just to help y'all be able to like retain the information that y'all learning. I want to help y'all in any way possible. Did y'all have any other questions? I don't really got nothing else to say. And I am gonna be I don't know if it's gonna be next week or the week after, but I am gonna start like doing like 101s. For anybody that want to book a 101, it'll be for options because y'all honestly, I'm about to start focusing on future like because today, like I just had an epiphany, but I'm still be trading options, but just like not really, I'm be like really focused on future, but I still want to help y'all with options because options is still lucrative. But did y'all have any other questions?
Yeah, I have one question. What made you choose futures over options?
Futures, I feel like in my mind, futures is the big dog. Like futures market is futures gives you more opportunities. The futures market is open 6 days a week, 23 hours a day. So if you work in the daytime, you could trade at night. If you work at nighttime, you could trade in the day. Like you have so many chances to trade. Also, they don't come with the Greeks, so you don't have to worry about like Theta and all of them eating your money up. Now I will say, of course, depending on which way you go, whether you go broker or whether you go prop firm, which I trade a prop firm, which means I don't put my own capital up. I usually pay like a little $50 fee and they give me money to trade with, and then I have to pass a challenge. And speaking of a challenge, y'all, I'm close to getting funded again, y'all. I'm close to getting funded again. But once you get funded, basically it's like they paying you to trade. So like any money you make off the money they let you trade with, it's like you get a paycheck. Like so if you woke up today and made $10,000, like well, after you get funding, like, and you make it after you make your first 5,000, the first 5,000 is all yours. But after you make your first 5,000, then it's like a 90-10 split. So you take 90% of whatever you make, and they take 10. So if you woke up today and made $10,000, then they would take 10%, which is what $100, and then you take or $1,000, and then you take the $9,000. So it's basically like you getting paid to trade. Like who wouldn't? I don't know. Anybody that don't want to get paid to trade, I don't know. I don't know why you trading it because I know that's a goal for me. Like to get like literally getting paid to trade. I can wake up in the morning, pick up my computer, don't have a limit to how much I can make, and that money can be mine. At least 90% of that money is mine. What all me having to do is pull out my computer and tap a couple keys. That's why I chose futures, because futures, I feel like futures is definitely like, it's my opinion, is more lucrative than like, because if you know what you're doing, like you can make money so fast in futures. I made $800 in less than 1 minute, like last week or the week before last, like on live with some of the people in the Discord. Like literally, you can make money, so you can lose it fast too. But if you know what you're doing, like, and you be patient and wait for your, like, you can make money really fast. I don't know no job that's paying you $800 for a minute of work. I don't know you no job paying you $800 for 8 hours of work. In options, you can do you can do the same thing in options. Just with options, like you have to pay more to play. Like, yeah, you can play a little bit, like pay like that $20 they had turned into like $500 the other day. But if you want to make like 20K, 30K, like you're gonna have to put up some money in options, like 2K, 5K. Like you're going to have to, not saying like I trade frugal, so my profit comes slower, and I'm okay with it because I'm not about to put up no big money. Like my day gonna come. But if you can make money in options, but you're going to have to put up more. Like you're gonna have to risk more to make more. But it's possible. It's my mentor was online today. She posted her win. I think she said she had made 45K today, either today or yesterday in options. So like it's possible. Like I didn't see people that I know like make real money, like money, but you have to put it up. You have to have it to put up to make real money. Like in options, if you don't have no real money to put up, like you can't expect you to be rich. Like you can't expect your profit to come fast because your risk not as big. So whereas in future shit, shoot, I can risk 300 and make a couple thousand if I do it right. But that's why I chose futures. I just feel like it's the big dog. Like I feel like, and it move, like the movement of the market is more, it's faster, and like once you tame it, like it's tame. Like once you get it, you get it. Anybody got any more questions? Oh, I'm surprised they ain't turned it off. Oh, they did give me a little warning, but they ain't stopped it. Did anybody else have any questions? If not, then I am going to end the meeting here. Again, I thank y'all for coming. I thank y'all for taking the time out to come. I thank y'all. I mean, this was for y'all. If y'all have any questions, feel free to ask in the chat. Feel free to private message me. Again, when I get out here, I'm gonna make the recording of how you can get to, y'all are welcome. How y'all can get to the options chain on your phone, and we will, because again, I don't know how to do it on the computer. And also I'm gonna open up the homework section. I think I already posted like the homework. I just got the section unlocked where y'all can't see it, but I'm gonna open it up so y'all can see it. And anybody that want to do the homework, feel free to do it. It's for y'all. It's to help y'all. I just want to see y'all succeed. I like, cause I started this because I want to help people see that, like, first off, my people see trading not no scam. We was taught and thought trading was a scam for so long, like they didn't keep us off the train. Like we getting on the train, we ain't missing that ride no more. Like we are not missing the ride anymore. And if I got to scream into the top of my lungs and be here to help, like that's what I'm gonna do. Like I feel like I'm doing God's work. Like I want us to have it easy. Like we didn't had it hard all of our lives. We had it hard before our lives had even started. Like, so I just want y'all to know, like, the journey is not easy, but it is worth it. Like what in life do y'all know came easy, like came so easy that was worth it? Most of the stuff that came easy left easy too. Like it was gone easy. You got it easy and it was gone easy. Like stuff that's worth it, it takes time, it takes patience, it takes progress, it takes dedication, it takes shit discipline. Like it takes that stuff, and it don't come quick most of the time. And in trading, like I don't want y'all, when y'all, even whether it's paper trading or real trading, when y'all lose, I want y'all to think of that as a tuition payment. When y'all go to college, y'all have to pay tuition to get a degree. We are getting a degree in trading that could change our lives. It's going to be worth it. It's something that this is something that can pay you more than any degree. Like if you get this shit right, you can be making more than doctors, lawyers without having to step out your house. You can be on a beach somewhere making thousands of dollars, enjoying your kids, enjoying your life. Like that is goals. Like we are here to enjoy life. It said in the Bible so many times. God did not put us here to struggle. He did not put us here to worry. He did not put us here to stress. Like, and trading can change that for us. And I say us because shit, I'm still in it too. I'm still trying to get out of it. So I don't want y'all to give up, even when it get hard. If you get to a point where you feel like it's hard and you feel like you want to quit, that's when you need to go harder because you didn't put in so much time to where like stuff just like you just need to go harder. You at that point where you need to go harder. You don't need to give up. When you think you need to give up, that's when you need to go harder. Study some more, chart some more, paper trade some more, read some books, watch some videos, like, because it's going to be worth it. But them losses, them just little tuition payments. I promise them just little tuition payments. Because every loss you take is gonna be a lesson learned. If you take the time out to journal your trades, it's going to be a lesson. Them journals can be something you can look back on and be like, okay, well, I did this that time. I'm not gonna do this. I'm gonna try something else because it didn't work out. Like those lessons, you're paying for those lessons, but make sure you use those lessons to get further and not repeat the same thing. Again, I hope this was helpful. I hope y'all learned something. I know it went in long, but I mean, it is. I'm not gonna say it's not hard. It can be because what's hard to me might be easy to you, and what's easy to you might be hard to me. So I'm not gonna say it's not hard, but if you put in the time in the work, like you can get it. You can get it. Because trading is definitely, I don't feel like it's hard. Like some people make it hard and they make it harder than it needs to be, but you can get it. You can get it. But again, I thank y'all. I hope y'all have a good night. If y'all have any questions, y'all can write in the chat. And I hope y'all do y'all homework because again, it is to help y'all. And just have a good night. Bye bye.
Thank you. Thank you.
Y'all welcome.